FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
We are back, and you are listening to Kerry Lutz on the Financial Survival Network. It's Manipulation Monday, which means it's time for Andrew Hoffman. Andy, how are you?
Good. As the manipulators are in the process of the end game starting, not necessarily this minute, but certainly in the coming months, it looks like.
Yeah, and you were at Jim Sinclair's Denver meeting, I heard, last week, and I'm sure that was real interesting, wasn't it?
Yeah, I mean, I consider him, my mentor. Him and Richard Russell, who I wrote about this morning. I went to actually see Jim Sinclair speak in Florida, in Jupiter, down in your whereabouts back 10 years ago. And then again at the GATA meeting in London. And it's always a privilege to see him. This guy, he spent the last year and a half going around the world, 3 or 4 continents, just reassuring people that they are right about precious metals. But what I was not expecting to hear from him was a pretty vehement belief that the gold, quote, bear market is over, and it's not a bear market. It was just smashed down, mirroring exactly what Richard Russell said the other day. But not only that, he said he expects a significant challenge to U.S. dollar hegemony this fall, and he expects $2,000 gold this fall or this year, possibly even as much as $3,500, which, of course, if you're talking about those kind of numbers, you're talking about the end game starts for the end of the, quote, recovery propaganda, the end of the ability of the PPT, the Fed, the Exchange Stabilization Fund to mask reality with financial markets. And again, if, God forbid, $3,500 gold happened this year, we're talking about a serious, ugly change in the world in the next couple of months.
I think you're pretty much looking at a serious war as well. Catherine Austin Fitz always said, gold 2,000, gold 2,500, you're looking at a war.
Well, it's something, it doesn't have to be a war, but it's something that causes an overwhelming swamping of the paper supply with demand. And we've seen it before. We saw it in 2008. We saw it in 2011. And, and we probably would have seen it in 2013 when they started QE3 and Abenomics, if not for, that closed door meeting between Obama and all the CEOs of the too big to fail banks in April, the day before they smashed gold and silver down and basically said, we need to buy some more time because we're destroying the world here. And look, the big wild cards are always things that are out of their control, like the price of oil, which from an economic standpoint, forget military, political, from an economic standpoint is the most surefire way of guaranteeing depression and crash. And right now we're sitting in the U.S. alone, we are at the highest prices of gasoline this time of year than at any time in history other than the summer of 2008. Right before everything fell apart. And of course, now the economy is vastly worse. The debt is vastly worse. Inflation is vastly worse. And we are actively instigating wars in everywhere from the Ukraine with Russia, Syria, Iraq, you name it. So there's so many things that could cause oil prices to explode from here. Not the least of which is the fact that we're now learning very quickly that the whole shale fracking thing is a bunch of bunk from an economic standpoint. We have gotten a bit of incremental production in the beginning, but the costs are rapidly escalating. And no, it's not going to save us, and it's not going to prove anything in the long term.
Yeah, well, that remains to be seen, but we definitely do have lots of interesting things happening in the world here. I mean, look at Iraq. That's crumbling. I mean, that in itself, we're going to see huge price increases in oil, aren't we?
I mean, right now, the top oil refinery in Iraq, it's 25% of refining capacity is out. They've taken it down because it's literally a heated battle, they say, you can see from space going on over this thing. And of course, that we're going to get involved in it. We've already sent over, quote, military advisors and special forces. And, what's going to be next is going to be, dropping bombs and putting feet on the ground. It's inevitable. I mean, look, it's no coincidence that the two areas right now in the planet where we're looking at potentially catastrophic wars are probably the two biggest military hotspots in history. One, of course, is the Middle East, and the other is the Crimean Peninsula because of its strategic importance to the Russians. Remember, it's their only warm weather port, the western part of their empire, and they will defend it to the death. So, something is going to give, especially with, America basically asking for it. We are desperate for a war. And, this is what crumbling empires do. They look for things to divert the attention of the public.
Yeah, well, we sure do have enough of them. And then we got de-dollarization taking rapidly underway in Russia as well, don't we?
Yeah, I mean, the most immediate, just Sinclair at his meeting, he was talking about, all it takes is one mistake from so many different areas for the whole thing to fall apart. I mean, again, these are not rocket scientists running things. It's a bunch of guys, as I always say, who wake up every day playing defense saying, how do we get to the next day? There's just too many fires to put out. And I mean, the biggest mistake they made in this, challenging Russia was the fact that Russia, let's face it, is a far more powerful economic power right now because of their resources and their current account surplus and their gold. And they have basically said, all right, we've had enough. We are going to get rid of the dollar entirely, and we're going to recruit as many people as we can to do it. The Gazprom clients, they just had this holy grail deal with China. China fully supports Russia. So across the board, you're seeing the de-dollarization. They actually called, the Russian finance minister actually called for an anti-dollar alliance the other day. I mean, these are not small things going on. We're at odds with Saudi Arabia about what's going on in Iran and Iraq right now. Remember, there's only a handful of people in Saudi Arabia that agree with us. And once those guys are out, Saudi will go back to being another anti-U.S. Hating country, and they will clearly side with the Russians and the Chinese in an economic war, and that's the petrodollar right there.
Hmm. Well, any other cheerful news here to talk about? We got we got good news for gold happening in India, don't we?
Well, we were talking about why gold went up on Thursday, and David Sheckman wrote about it today, and others have written about it today. Bill Holter wrote about it today. Because the fact is, the propaganda will always say, well, it's because of Iraq, it's political. And I mean, first of all, Iraq, this thing with Iraq's been going on for weeks, and Ukraine's been going on for months, and Syria's been going on for seemingly forever. It's not because of these things. Oil prices have been near record highs for much of the last year, aside from that September, summer of 2008. But you throw in the fact, you combine the FOMC making, I wrote in Yellen's Last Stand the other day, as embarrassingly disjointed and blindingly dovish statement as possible amidst the so-called recovery. Then you have all these wars going on, the de-dollarization. You have this Narendra Modi just took over in India, and sometime in the next few weeks, he's going to announce his new policy toward gold, which may well be to repeal all the ridiculous tariffs and taxes that we predicted would happen. And you have, on top of that, the Shanghai Exchange is now creating an international platform. They've already created a free trade community in Shanghai, which is one of the reasons people are not going to be able to track Chinese imports anymore, because it's not just going to be Hong Kong, it's going to be there too. But on top of that, they're saying that anyone's going to be able to trade gold at the Shanghai Exchange, which already is the largest physical exchange by far. Dramatically higher than the Comex. Here's a quote from the chairman of the Shanghai Exchange a couple of weeks ago. He says, we are going to change the current gold market with its current consumed in the East but priced in the West arrangement. That's the problem all along. They buy it all and we price it. And that's not going to happen. We are going to sometime, maybe very soon, especially if Sinclair is right, we're going to be waking up here to see that gold has already made its move for the day when we wake up here in the States. And they're going to be up moves, not down moves, because the Comex is eventually going to be dead. It's going to be no longer used, or if it's used, it won't have any impact on the markets at all.
So the Comex is dead. Long live the Comex, huh?
Yeah, well, it's still there now. But I mean, look, what happened on Thursday is a big deal. Okay, not necessarily the $40 or whatever. The fact is something is changing. And it's a whole combination of all these things we're talking about. I mean, how much longer can I and the rest of our team here at Miles Franklin Blog scream about the price of gold and silver being way below the cost of production, about the fundamentals, the record physical demand, the plummeting mine production? I mean, the wars, the surging prices here. I mean, just in the United States, the U.S. The BLS Foodstuffs Index is up 23% this year alone. Healthcare. I looked at a chart today. It showed U.S. healthcare costs on average are 10 times more than any of the other, quote, civilized nations in the world. And that's before Obamacare. And the gasoline prices at basically the highest they've been at this time of the year, all but 1 year. So there's just too many things that are converging against the powers that be. I wrote last week of the giant sucking sound in the markets as the manipulation has taken prices to record levels with the worst fundamentals ever, the highest leverage. There's no market participation, no volatility. Sinclair was talking about how, other indicators he sees, like the utilities leading, which is a very dangerous thing. I mean, there's such a giant vacuum of air underneath the markets that one of two things has to happen, I would say, in the next year or so, certainly sooner if he's right about the gold prices. And that's either a 2008 style crash or a 2000 style Zimbabwe hyperinflation, because these are so unsustainable, not just in the stock market, but in the bond market, and in some cases the high-end housing market, that something has got to give.
I think you're correct. I think something has to give, and right now we got to give for a second, but we'll be back and talk more about what's going on in the world and its impact on precious metals on the Financial Survival Network.
FSN Radio. It's all about what's next.
Do you have Medicare or health insurance through your employer? If so, listen up. The healthcare reform wasn't written to save the healthcare industry or even to lower healthcare costs. Shoot, it isn't even designed to insure the uninsured. It's just a temporary political byproduct. Like a flat rock you step on in a swiftly moving stream, Obamacare is just a means to an end. Want to learn more about Obama's ultimate objective? Then you'll want to review our latest research presentation found on oclies.com. In it, a health expert and industry insider explains what you think you know about caring for your health is about to drastically change in 2014. Plus, he details the simple steps you could take to save thousands of dollars per year in health costs. It's free for you to preview at oclies.com. Don't waste time. What you don't know about the healthcare reform could hurt you and your family.
The Financial Survival Network. It's all about what's next.
We're back. It's Manipulation Monday. We're talking with Andrew Hoffman of Miles Franklin. So Andy, when you look at it, how many people look at what happened on Thursday and say, well, I think I'll wait for gold and silver to pull back and then I'll buy some, right? Isn't that like a typical attitude?
Well, of course. I mean, after 3 years of being 3 years, are you talking about 12 or 15 years of every time? I mean, I have a couple of cartel rules I've named. One of them is all great days must be followed by horrible days. And yes, they failed so far. They're certainly trying, but people are used to that in general. I mean, heck, they took GDXJ, the junior mining index, down 4.5% on Friday. I mean, they were screaming that we are going to try to attack on Monday, and they did their Sunday night sentiment, their 2:15 a.m. and all that stuff. But it's failing. And I mean, at some point, it's going to get back to the mentality of 2011, where you buy on the dips. You don't fear the next shoe is going to drop. And, there's still plenty of the newsletter writers out there saying, beware. And of course, I see Bank of America says, be warned, it's time to sell gold. It's going to crash because our technicals say so. But at the same time, you see far more people starting to really get it. I've seen, between Russell and Sinclair making their calls, and I see a whole bunch of other of the perma bears out there saying now is the time to buy. I don't think it's going to take that much to get that sentiment changed. And when it does, you're going to see people fly back into the metals, both paper and physical, like you've never seen before. And, remember, we had shortages in 2008 and 2011 and 2013. I mean, look at those numbers. They're getting, increasingly short intervals between shortages, because now we're in 2014, and I would be shocked if we don't have the next big shortage by year end. And as we, as Andy Schectman has talked about forever, I mean, that's going to be the end of the bullion business. There's going to be no supply. And if you don't take the advantage of the windows like the one right now, particularly at prices below the cost of production, you're apt to be stuck in a situation like 2008 when prices are plunging and you can't buy anything, or 2011 when prices are surging and you can't buy anything.
So does that mean we're going to be out of business here?
Yes. I mean, I fully expect, the end game for the bullion business, if the government doesn't do stupid things, which it would only do retroactively, it would only do once the prices explode, is that we run out of metal. And that's why we, the principals of any smart bullion dealer, own it themselves. That's our hedge, because there's only so much out there. There's probably only enough actual metal out there to protect 1% and therefore give you a chance to become the new 1%.
Well put. And yeah, it's just hard to fathom actually seeing, no metal in the market at all, like not being able to ever buy it. I mean, even jewelry, it's just hard to envision that.
Well, there's always eBay and stuff like that, but it happened. I mean, in 2008, we were told that the world's falling apart and no one wants gold and silver because of its liquidity concerns. The fact was, you literally couldn't buy anything for 4 straight months. It was out completely. Silver premiums in the physical market were about 100%. Okay, I'm going to say that again. Somewhere between 80 and 100% was the real price of silver over the $8 or $9 price that they smashed the paper price down to. And you couldn't get it. We had 4-month waits from every major mint in the world. And then when you got to 2011, when the price went up, because remember, gold and silver are inelastic. They don't care about price. In fact, they go, the higher that the price goes, the more the demand was. You couldn't buy anything either, particularly, hint, silver, which completely ran out everywhere when the price was $50 an ounce. So again, we can't be more vehement about how tight the supply is, and particularly in the silver market.
Yeah, amazing. And, it's just what amazes me is how people have their heads in the sand because, the stock market is going up, so everything must be okay. All the world's problems will work themselves out, and we'll just go on like nothing's happening, right?
Well, remember, very few people are actually in the stock market anymore. Everyone's lost their shirt between the 2000 to 2002 stock crash and then the real estate crash thereafter, and of course all the unemployment since and the record low savings and savings rates. So there's not that many people out there, and again, that's where where the propaganda stool breaks for the powers that be, because people just don't believe it anymore. They're no longer looking at the Dow and saying, well, the Dow is up, so that must mean things are great. They're starting to realize that it's all BS. Like, you look this morning, the real data comes out that's bad. I tell you about the European activities at a 6-month low, the Baltic Dry Index, the Chinese Beige Book, and then the U.S. puts out one of their diffusion indices that says that things are going up. Mm-hmm. And it just makes no sense at all, because people know that the real world has absolutely no correlation anymore to what the government tells you. And look no further than Whirlybird Janet. I mean, again, how much more dovish can their statement have been? The FOMC board on Thursday. That's not how people talk if there was truly a recovery.
Yeah, exactly. And the propaganda goes on, and people you're becoming more and more immune to the propaganda, but that doesn't stop them from trying, does it?
No, and they will fight to the death. But the fact is, what you can only, we learned last week, the studies coming out that shows the central banks of the world own 29 trillion in stocks, which is basically half of all the stocks in the world. We also know for a fact the Fed owns a third of all the treasury bonds. And then, of course, you throw in things like Belgium, and you know that they own a lot more than that. I mean, I've proven in proof of the tapering mirage that they have bought a lot more treasuries than they say they have. And the same goes. They own 40% of all the mortgage-backed bonds. At some point when you own everything, you can't buy anymore. And that's exactly what's happened in the Japanese bond market. They literally own everything. They've taken rates to zero. There's no more trading it anymore. No one buys or sells. I mean, this is what's happening. They've created this giant vacuum under the market, this giant air pocket. You can only take it so much higher when the valuations are this high and the fundamentals don't support it. And the same goes for the, conversely, what I call the gold anti-bubble, where they pushed it, the beach ball, so far below the water that, you just can't push it anymore. We've been screaming it all year at this 1200 level and the 1819 in silver. They just are not going to be able to push it any lower than this because the miners will go out of business. And sure enough, you see something that happens last Thursday, and people say, well, it's because this. No, it's because the fundamentals are starting to assert themselves. And at some point, particularly if Sinclair is right about what he says in the next 6 months, they're more going to assert themselves. Because if the price is, forget it, 2,000 or God forbid 3,500, we're well into the 2008 style chaos. And this time around, there's going to be no bailout.
I mean, who's left to do the bailing and what's going to be left to bail?
That's right. There's nothing left. There's no more ammo. All they could do is, watch my good friend Dan Amadori. Everyone should Google the day the dollar died. That's where you stand. It's either crash or hyperinflation, or both. And some things going up and some going down. But this is not going to last forever. One of the most important thing I think Sinclair said at the whole meeting. Someone asked the typical question. I get it all the time. Well, they've been so good at smashing the price down. I mean, what's to say that they'll keep doing it forever? And the answer, of course, is just because they've been successful for 3 years at something doesn't mean they're going to do it forever. The fundamentals don't favor them. Economic Mother Nature never loses. And in this case, you're talking about the greatest Ponzi scheme in history in its terminal stages. So I wouldn't worry too much. People, I'm sure, during the late 1960s who owned gold were pretty pissed off at the London gold pool, thinking it would never end. And then the next thing you know, it went from $35 to $890 or whatever it was in a matter of years. And I fully expect that when the cartel is broken, that he says the numbers are going to be, quote, unfathomable. I think the numbers are going to be 5 digits.
I tend to agree. I don't know if I ever told you this story, but we lived in New Jersey. My mother commuted into New York City on the train and became friendly with this woman, and it was just at the time when the gold window was closed, and the woman was in the jewelry business, so of course she was allowed to buy gold throughout, with no restrictions. And she told my mother, Doris, buy gold. The real price of gold is much higher than the price that the government is saying it is, which was $35 the ounce at the time. Just buy it. You're not going to be sorry. And my mother bought jewelry, 18-karat jewelry. And of course, that jewelry is worth far more now than it was when she bought it. And the woman, all the logic, everything that we say today was exactly the argument that the woman made to my mother then. The fact that the market was controlled, that the dollars being printed, inflation, the Vietnam War, the Great Society, inflation, everything. And nothing's changed, only it's about 1,000 times worse now than it ever was back in the late 60s and early 70s.
Yeah, I mean,
amazing.
At least the London gold pool was overt. They told you about it. It was like QE, like this is what we're doing. And, and it wasn't all markets that were manipulated back then. Obviously, they weren't able to control stock markets. They didn't know how to do it back then because they would be volatile and they'd fall. We're at the point today where there is literally nothing left. If you're talking about the U.S. now, not every market in the world right now is rigged. Clearly, the Chinese are not rigging their stock market because it's sitting at multi-year lows on the verge of collapsing. But pretty much anything in the West is completely and utterly controlled, from the Japanese with their Abenomics, and now throwing the pension funds into the stock market, and Europe with its negative interest rates, and I mean the algorithms that control the stock markets in the West, 100% rigged. There's not one aspect of the U.S. financial market that even remotely resembles a freely traded market. The only problem, the chink in the armor for these guys, is that physical gold and silver cannot be manipulated. Paper can, but physical can't.
Yep, and that is where we find ourselves right now. And we will talk to you next Monday as the situation continues to unfold. And gold and silver, or I should say paper, will find its true value. Gold and silver already have found their true value. It's the paper price that's been manipulated, right?
Well, one of these days we're going to wake up and it won't be Manipulation Monday. It'll be Real Monday, and it'll be a shock to the world. I'll tell you that much.
And we'll each break open a bottle of champagne. You find Andy's work on milesfranklin.com. Subscribe to his newsletter and Bill Holter's, and go over to Financial Survival Network. Subscribe to our newsletter. Andy, we'll talk to you again next week. Be well.
Look forward to it. You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.